A lot of buyers are pressing pause on their plans these days, holding out hope that mortgage rates will come down, maybe even back to the historic low 3% from a few years ago. But here's the thing. Those rates were never meant to last. They were a short-term response to a very, very specific moment in time. And as the market finds its footing again, it's time to reset your expectations. Hey there, I'm Christina Sparks, realtor with Real Broker, owner, House of Sparks. Back in 2020 and 2021, 3% mortgage rates gave buyers a serious boost. More affordability, more buying power, and more opportunity. But those rates were a result of an emergency economic policies during the height of a global pandemic. Now that the economy is in a different place, we're seeing mortgage rates in the high 6% to low 7% range. And while experts currently project a slight easing in the months ahead, most industry leaders agree rates are not going to go back to 3%. As they shouldn't. Instead, a lot of forecasts suggest mortgage rates will settle in the mid 6% range by the end of 2025, pending any major economic shifts, of course. As Cara, senior economist at Zillow, says, while Zillow expects mortgage rates to end the year near mid 6%, barring any unforeseen shocks, that path might be bumpy. Basically, waiting for 3% rates might mean waiting longer than you'd expect, and in turn, missing out along the way. Instead of putting off home buying indefinitely, make a plan to get there and focus on what you can control. Your budget, your credit, and working with a trusted professional who can explain exactly what's happening in the market and how to navigate it. Your agent and lender make all the difference in this process. The experts have insights into down payment assistance programs, alternative financing options, negotiation strategies like what's working in the market right now, and overall the experience you need on your side to understand the creative ways that will make your plans work for you. And here's the biggest thing to keep in mind. Since rates are projected to ease slightly later this year, if that happens, because I can't tell you how many times we've actually been told that, but if it happens, it could bring some more buyers back into the market. Acting now gives you a head start, especially with more homes on the market than we've seen in years. It is currently a buyer's market. There are more listings, less buyers. Buyers can choose from all of the listings on the market. Think about it. If mortgage rates do come down, what do you think everyone else is going to do? That's right. They'll jump back into, and they're going to snatch up those houses that you want. Getting ahead of the rush could put you in a stronger position to find the right home with less competition. Realtor.com sums it up pretty well. Staying out of the market in hopes of a rate drop that never comes can lead to missed opportunities. Rising home prices, rent increases, and inflation might outpace any future savings on interest. And if rates do fall sharply again, buyers could face an entirely different challenge: surging competition. Those 3% rates everyone remembers from a few years ago were the exception, not the rule. Say it with me again. The 3% rates were the exception and not the rule. Now that they're settling into new territory, interest rates, it's a good time to adjust your expectations and learn more about where things are heading as the market shifts. A local real estate agent and a trusted lender will be your best resources, always keeping you up to date and informed so you can make sense of your options and build a game plan that works for you. Go ahead and like this video if you learned something new, and subscribe to my channel for up-to-date information about the home buying and selling process, and of course, market updates. Have questions? Feel free to reach out. I'm happy to help any way that I can. Have a great day.